Hello everyone. Welcome to day one, the first video of the Simple Trade Profits 100% free trading course, where I will be putting out weekly videos with new strategies, techniques, indicators, so that in hopes that you can combine all of them to form your own personalized trading strategy. So the goal of this training course is really to take somebody who's fresh, somebody who's new, and essentially hand walk them through how to create their own strategy, their own trading strategy, how to look at a chart and know what it is they're even looking at, and how to understand the content that Drew and I will be putting out into the VIP channel, the daily, sometimes even hourly content. Pictures, strategies, what we're going to be doing. So the goal of this training is to get you to a level so that you can understand what we're going to be putting out. And we're going to start with the basics. Since I want to start somebody who's new and walk them through, we're going to start with the basics. This video is going to be a very basic video, and some of you may already know what it is I'm about to talk about, but I still recommend that you watch the whole thing. There may be something you don't know. I'm learning still every single day. Every time I think that I know everything about a certain indicator or something, I always learn something. So I still recommend that you watch it all the way through. So let's go ahead and get started. Today's video, day one, is going to be about Japanese candlesticks. What are candlesticks? And just like a brief history, Japanese candlesticks were first really introduced in the 70s or 80s. Before that, we had charts that looked like this. They were line charts. But with the introduction of Japanese candlesticks, we get a lot more information from a chart by looking at candles as opposed to just a line. So let's start. There are two types of candles, and they're usually defined by their color, green and red, although you can change the colors, but by default they're going to be green and red. A green candle is what they call a bullish candle. A red candle is a bearish candle. And these candles are used to describe price action in a given time frame. They have four components. They are formed from an open, a high, a low, and a close on both types of candles. So a bullish green candle indicates that price opened at a certain price, and when it closed at a higher price. Bullish means that price moved up during that session, during that time frame, and closed. Now, the opposite is true for a bearish candle. A bearish candle basically is price opening at a certain area, and then sellers forced the price down to a lower area, and it closed at a lower spot than where it opened at, making it a bearish candle. There's two types of candles, but there's also two components to the candle that we need to talk about. There is what they call the body of the candle. This is the part that actually is collared. So like I said, by default it's going to be green and red, or maybe like a teal. Some people use black and white, but by default green and red. So the body of the candle is the part that is actually collared on both of them, both the bullish and the bearish. When I say bearish, I mean red, price going down. When I say bullish, I mean green, price going up. So we have the body of the candle. The second part of the candle is what they call wicks. Some people call them tails or shadows, but most people tend to call them wicks. These are the little black lines that are extending from the body of the candle. So, for example, let's take a look at this one right here on the left, the bullish candle. This means that price opened here. It traveled down a little bit. It came up, traveled up even higher, but eventually closed right here. So we had an open here. We had it move around, and this whole, and it created these wicks by moving to that price. So price moved, it was all the way up here at one point, but sellers came back in and pushed it down, and it closed here. So we have wicks on both sides, on the bearish one too. So in this example, price opened here, or the session, the time frame opened here. It maybe traveled up a little bit, traveled all the way down, and then buyers came back in and pushed it back up, and it closed right here. So we have the body of the candle, and we have the wicks of the candle. So let's just go a little bit more in depth with this. So there's two components to the candle, the body and the wick, but the third thing you really have to pay attention to is the body of the candle relative to the wick. So let's look at this example here on the left. What is this telling us? This is telling us that price opened here. It traveled up, traveled all the way up here to this high. This is the high of the candle. Remember, we had the open, the low, the high, and the close. So it opened here, it traveled all the way up here to the high, and then sellers came in, pushed it down a little bit, and it closed right here. So we have a big body, we have a small wick. What does this mean? This means that buyers were really in control of this whole session, this whole time session, whether that be 1 hour, 1 day, whatever. Buyers were strongly in control because buyers pushed it up. We did have sellers come in and push it back down and close. But look, remember this candle. I'm going to leave it up and look at it and compare it to this candle over here. So with this one, yes, it is still a bullish candle because price opened here and it did close higher. So it's still considered a bullish candle, but look at how far it had traveled up. It traveled all the way up here, and then sellers came in and pushed it all the way back down, and it closed here. So although this is a bullish candle, this is a very bearish sign. This means that there was strong rejection from this price up here. And the buyers that were buying here, they were outnumbered. There was weak buyers. The buyers were not in control of this session. The bears were definitely in control. Although it was a bullish candle, this is a sign that bears were definitely in control of this session. So it's important to first understand what the candle is telling you, but then I'm not going to get into all the trading portions of how to use these in your trading strategy. I'm going to save that for a future video. But the first thing to understand is the components of the candle, but also the third thing, so the body, the wick, but the third thing is the body relative to the wick. So you may have a green candle, you may have a bullish candle, but if you see wicks like this is telling you that sellers came in up here at this high and drove price down almost to where it opened at. So remember these candles. Another form of candle you have, candlesticks we can have, are what they call DOJI candles. And like I said, I'm not going to get into how to use these in a trading strategy. I'm just going to explain what they are. DOJI candles are essentially a candle where price opened and closed at the same price or very near the same price. So looking at this candle and knowing the components are the wick and the body, do you notice that there's no body on these candles whatsoever? None. It opened and it closed at the exact same price. It opened and it closed at the exact same price. But look at the wick. So we opened here, it traveled up, it traveled down, but the buyers down here pushed it back up and the sellers up here pushed it back down, and it closed at the exact same spot. This one, for example, it opened here, buyers pushed it all the way up, sellers came in up here at this high and drove it right back down, and it closed at the exact same price. So the one thing to take away from doji candles is it's really it's just a session or a time of indecision, meaning that nobody really has control of this time, of this session, of this time frame right now. There are equal buyers to sellers. So just remember that that they open and close at the same spot, and nobody's really in control at this point. So the one thing that we also need to talk about is these candles represent different times depending on what time frame you're on. So if you look up here on the left, there's a D right here. This means daily. That means every one of these candles is a full 24 hours worth of trading. So down here you can see I have 12/5/19. It is this candle I have circled right here. This candle is the full day of December 5th, 2019. Price opened, traveled around, closed. And if you go to this candle, this will be December 6th, 2019. So we are on the daily time frame, but you can change this. You can change this to other time frames so that each one of these candles is a different time. So let's look at another one. This one here I have on the 1 hour, the 1H you can see up here. Meaning this candle right here is a full 60 minutes of trading, 60. Look down here, 3/21, March 21st, just a few days ago. March 21st, 2020, 7 a.m. So this candle is from 7 a.m. to 8 a.m. Right at 7:59, right when the clock switched to 8, we moved to the next candle. So each one of these candles is 1 hour. So let's go over to the chart, and I'm going to show you a few examples of time frames. So here I am on the Bitcoin chart, and I am on, if you look up here in the top left, I am on, it says 1H. That means if I hover my mouse over, it says 1 hour. What that means is every one of these candles is a full 59 minutes, 1 hour, or 60 minutes, 1 hour worth of trading. So I'm hovering over this candle with my crosshair. Look down here at the bottom. It says March 30th, 2020, 7 o'clock, 7 a.m. So that means this candle was from 7 a.m. until 8 a.m. And then when we go to the next one, after 7:59, once it turns to 8, this candle begins. And there are several time frames you can choose between. This is the daily. So that means each one of these candles is a full 24 hours worth of trading. So if you look down at the bottom again, you can see this is March 23rd, March 24th, March 25th, and so forth. There's multiple time frames you can use, and you use these time frames to get an idea of, you know, what's going on in the market, where the market's headed. So in future videos I will talk about how these time frames can be used in combination to form a trading strategy. So just to recap, a candlestick chart will show you who's in control by the color of the candle, whether that be a green candle, a bullish candle, or a red bearish candle. So remember that green candles bullish candles means that price opened but then closed at a higher price. So the advantage of having candlesticks is they get to show us who's in control of the time session, whether it be 1 hour, 4 hour a day. It gets to show us who's in control. That line charts never did. And the last thing, pay attention to the body, the wick, and the body relative to the wick. If we have a bullish candle, but we have a really long wick at the top, is it really bullish? So those are the two things to really keep in mind. I hope you guys feel a little bit better now when you look at a chart. This is day 1 of the free training, and I will see you in the next weekly video.